So, a lot of people think the bull run is back, and this is what they look like trying to catch the next upside move. Quite amazing. So we have a lot to cover today. Let's get straight into it. And I want to start off with something on a positive note, which is a tweet from Willy Woo over here. And he says, a long history of the TD9 bullish reversal on the monthly candles for the US stock market since the 1900, i.e. typical timing for exhaustion of a bearish trend, 15 events in 120 years and 13 played out. It's happening now. The last event was 2009 and the bottom of the world financial crisis. And if you click on that, you can see these are the TD9 sequentials. I wanted to take a look to see if there's anything relevant on the Bitcoin monthly chart with regards to the TD9 sequential. It was created by somebody named Tom DeMark. I actually used to trade the system quite a lot back in the day when I first started with crypto. And if you look at it on the monthly chart over here, you did get a 9 already on Bitcoin monthly. And now these are extensions. So you have extension 1 and extension 2. Basically what this is showing is that, yes, the move is getting exhausted from a high time frame perspective. And maybe there is really some hope. But at the end of the day, a capitulation is still, unfortunately, a possibility since Bitcoin is stuck below all important moving averages. But
sorry, your camera's frozen, right?
My camera seems fine on this side. Let us know in the comments, guys.
Slowly moving again now.
Is the camera okay? I mean, you don't need to see me anyway, but okay, I'm going to continue. Just let us know in the comments if it's unbearable. I also wanted to take a step back because whenever you have a little bit of green within the markets, you can feel the sentiment and the euphoria kicking in. And I thought, let's take this chart very, very simple, just using the important moving averages, and we take the price off completely. This is on the futures chart for Bitcoin, the CME, and I have it on a weekly scale. I've taken the price off, so you can see there, if you put the price back on, this is essentially telling you that pretty much you should still be out of the market. In a nutshell, long-term investors should not be in the market. You have all moving averages postured in a downward angle with the short below the medium, below the long-term, all of them angled downwards. And let's see where price is lying within that. Price is pretty much also stuck below the moving averages. So long-term, not too much has changed. What about this chart over here, which is our Bitcoin volatility divided by the VIX, and then we have that overlaid at the top with the price. And I put this in yesterday's daily candle newsletter. I did also show it on the stream, but after the stream, I went and I worked out what happened with those relevant moves. So if you have a look over here with the left-hand side, at the end of October, the move took place to the downside when the volatility expanded off of the lows, as can be seen over here. Once you had that expansion like that, this took Bitcoin down from $6,500 all the way down to $3,200. You had 2 expansive phases over here. The first one that went like that and led back into the bottom, that took Bitcoin from 9,000 to 13,200. And then you had the major expansive move over here, which took it from 13,200 all the way up to all-time highs. As you can see, we haven't expanded yet. The volatility has come down. It actually went below the line over there. And now we're just waiting to see what the next potential move is. Bollinger Bands are tighter than what they've ever been. Price is stuck below the upper and the lower Bollinger Band, angled in a downtrend with Bollinger Bands angled down as well. So basically that tells you that the risk definitely remains more to the downside for the next major move. Now, with that being said, a lot of people may be wondering, well, when will this actual volatility kick in? Because this is not actually the move. The move hasn't happened yet. And it could really be very soon. If you have a look over here from Michael J. Kramer, he says the VIX expiration is this Wednesday morning, and you're wondering why the VIX isn't moving. Well, wait until tomorrow, guys. So Tuesday, today, tomorrow, when the VIX expiration starts to take place, then you might start to see an expansive move within the VIX. And if we take a look at that, what does it look like over here? Again, I've told you that it's kind of consolidating around this risk line. Anything above that risk line means volatility is likely coming into the downside. Anything that squeezes below this risk line at 30 means that it's pretty much going to contract down, and that gives price action room to move to the upside in at least stocks and crypto. So keeping an eye on that. What about the total market caps? I thought let's take a look at this. We haven't seen it for quite some time. I have it on a 3-day chart over here, and you can see it's been stuck within a range, just like many of the different altcoins. Here's your primary range. You got the top of the range, which is resistance, bottom of the range, which is support, matching in with a diagonal over there. So it is an interesting place at the moment, and I would say that, you know, if it lines up with a support area with regards to whatever relevant crypto you're looking at, it probably does make sense to at least bid or buy a little bit within those areas, looking for potential bounces. But you have to be cognizant that this could eventually break down. Total 2, also same thing, stuck within a broader range over there. So I am keeping an eye on that. And then I wanted to touch on the weekly chart over here. Here's your weekly range, which is a massive one. We did outline that you had the weekly high at 19,947, the weekly low at 18,183. And until one of those sides is broken, the range does continue. And therefore, you can only really be taking trades on a short time frame. High time frame, not much else is going on. Stuck below all the important moving averages. Bollinger Band squeezing in, as we know, so not a good thing. The 3-day chart is coming directly into that parallel resistance at the top over here. So let's zoom into that so you can see what that looks like. So the diagonal that's measuring from the local highs on the daily chart, the wick highs, would be coming in, if it were to hit within this 3-day period, is at 20,353, which is why clearing that 20,500 level is so important. You can't really be bullish on the high time frames until something like that happens. If anything, you'd be looking for shorting opportunities within this area over the next couple of days. I'm not saying today, I'm saying over the next couple of days. That's pretty much the way that you should be playing it. And that's all going to depend on the stock market. And if you look at the S&P 500 futures, which is one of the big drivers of pretty much all the markets, I am still eyeing out this area over here. I was hoping that it would come into this zone previously earlier on in the week, but it's taking a little bit longer than expected. And that region is 3,820. And then this is the next area of interest. So I expect that the S&P 500 futures will start to lose steam somewhere within this zone. And this gray box comes up to 3,900. So between 3,820 and 3,900, that is your zone to watch. Maybe on your own charts, just take probably one of these circles and put something like that. Mark off this as your area where you are looking for price to most likely get faded, and that will obviously have a knock-on effect into crypto. NASDAQ, you can see same thing. Its resistance zone is coming up soon. Percentage wise, it's looking at about another 2% move to the upside, which means that longs have to be short-term. You're playing with fire if you're looking for a swing long for a short-term scalp long or a day trade position. That's perfectly fine. The DXY over here is pulling back, so it's looking like it's following the red path at the moment, but anywhere around this yellow dash line at 111 and possibly even this 110, I do expect some sort of a reaction where it could potentially bounce from that zone. So those are the things I'm keeping an eye on over there. This will be a short stream. If you do enjoy this content, please take 1 second out of your day to give this video a like and hit the bell notification and subscribe if you are not already. And then we're going to get into the short-term trades, which are more important, obviously, for today and what you guys are here for. So daily chart over here, pretty much it's broken through some of the shorter term moving averages, but you can see how it's reacting over here at the white 34 EMA. It's selling off every time it gets above that. It's being sold into, and you have the RSI, which has broken back into its trend over here. And I did tell you my optimal short would come in with a push of the RSI into this red zone, straight into the top yellow line, which has been resistance throughout. I would love to see a short opportunity there. And who knows, maybe if we get a bit more of a push today, that could be an opportunity. So that is Bitcoin on the daily chart. The Super Guppy indicator shows that pretty much it's still stuck below all the important moving averages, stuck below the horizontal resistance, and therefore you should be cautious. But what would it look like to go long? Again, it comes in at around that area, like I said, the 20,500 level, which is over here. I just want to show you from a price action standpoint what you would want to see if you're bullish. Do you see this area over here? You want that zone to get taken out. And this is a nice wick that usually would create a little bit of a reversal. So if you saw something like that and price push through, filled some of this liquidity within this candle over here, and then came back down to retest 20,500, that would be your signal to go long again. And then you could target this zone over here at about 25. If you clear that, then you start to talk about the CME gap again on the futures chart, which is coming in around $28,000 in that zone. So at the moment, that's kind of the hope for the bulls. But what does reality say? Reality says that most likely this is going to act as resistance in the same way that it has every other time, meaning that any push into this box over here around 20,000 will most likely turn back over. That's what reality is telling you. But you can do what you want. Of course, the lower time frames, let's take a look at that. Now, I want to outline a couple of things with regards to these charts. Let's just move that up, make this bigger for you. I want to outline that everything is still in a range, and I'm sure you can agree with me. Now, there's a lot of lines and things going on here, so just focus on the box that I'm about to draw. I'm sure you can all agree this is a big range that we have over here. Then each time price action moves, it's forming multiple ranges. So you have two phases. I'm going to do it on the left-hand side so it makes more sense, okay? So you have this range over here, which is the lower half of the major range, that bottom section. So I'm going to leave that there just so it makes sense for you. Then you have another range which is formed over here. So the price is still within a range. You're in the bottom part of the range right now. If things start to break out and form a new range back into the top side over here, then that is the best way to play the market at the moment, in my opinion. And what I mean by that is this. So I'm doing it on the left-hand side just to keep the picture clear over here. Anytime that we sweep the bottom of the range, you want to trade this as a range trader. You buy it up towards the top of the range. You again short sell to the bottom of the range, buy it up to the top of the range, short sell to the bottom. And then eventually, if it does break through the top over here, then it will start to establish a new range, which would be this box over here that I've just drawn. And then you do exactly the same thing. Then you're looking to long to the top of the range, short to the bottom of the range, long to the top, short to the bottom, until such time as this major range gets taken out, which I don't know how long that's going to take. At the moment, it looks like we'll still stay within the bottom of the range. And one reason that I say that is because you do have, of course, this diagonal that's holding everything down. If we do start to crack through this and hold above it, very, very important, you must hold above it, because if I zoom in like this, have a look, this is resistance, right? This is the middle of the lower range that we have. So you can see again that price action that's wicking into it. If you see this start to clear through here, like this, you start to see that hold above there, retest this zone as support. That gives you a signal where you can now long that to this side over here, to the top of that range. And then same thing, if you manage to hold that, stay above, now you can start longing to the top of the next range. But you need to wait for confirmation. And I know a lot of people tend to front run the things that I say, and consequently they get wrecked. For example, yesterday I said I was looking at MATIC as a potential short, and I know a lot of people just started to short it and they shorted too soon. So let's go on to MATIC and I'll show you what that one looks like. Same thing, look at the range. Do you see the range that it's in? Firstly, you had the range down here. You had a lower end range. Where's the box? So you had this range over here. That was one. And then you broke through into that one, and then you started to establish another new range. And that range looked like this. And I did give this trade to you guys. I said that we were longing over here, looking at this as a deviation in the same way that all of these happen. So for those of you who are still in the long trade, you may as well hold it. You would have TP'd your first TP at the mid-range over here, and you'd be looking to take profit on the rest at the range high. Now, yesterday I mentioned, look, I'm watching how price is going to react into this area, because every time on this diagonal, it's rejected, and then look at that, it smacks straight through. So that would have almost immediately been your signal to start to look for a long. It obviously happened very quickly, so most of you probably would have missed it, but you would have gone long as soon as you see candles closing above here, stopped below this region over here, and you broke through the mid-range, and now you're looking to take profit on that long if you were a late long. So you didn't enter over here, but instead you entered over here. You're looking to take profit on the top here, and you need to manage your risk carefully. For the short side, because anything can happen, guys, look at this. If you look at the stochastic RSIs, they are, of course, really reaching over here. We're near the 100 mark, and eventually this is going to turn around. So one of two things can happen over here. It could go something like this, right? So you have the diagonal and you have the mid-range. We've broken through the mid-range. What could happen is price goes up like this. Momentum oscillators are overbought. You could start to deviate back below. And now the question is, do you buy the higher low on the mid-range, or is this just going to be another deviation above the mid-range in the same way that you saw over here, for example, and price went down, and then price is going to come back down? Well, this is where risk management comes into play. You could technically play these kind of trades both ways, as long as you have your risk clearly defined and you have at least a 1 to 3 risk to reward ratio, meaning that if you get stopped out, you're going to lose $1, but if you win, you're going to make at least $3 to the up or the downside. That is very important. You have to have it clearly defined, and you need to also know your win rate, and I can't do that for you. You have to back test what your results would be. So at the moment, if you're not in this trade, definitely I wouldn't go long now. I would just be patiently waiting to see what happens, and you're looking more for either the return back into the mid-range to buy the dip. So if you're not in this trade, that's your two options. One is you're looking to see if it comes back down here, bounces off mid-range, then you buy the dip and take it back to the top of the range. Or you're waiting to see, is this thing just going to continue to rip? And when you get towards the top of the range over here, you're waiting for a deviation above the range high, and that's your trigger. You go short, and you're looking to take that thing all the way back down. So those are the trade opportunities for MATIC. Now, what about Ethereum? Let's take a look at Ethereum. So Ethereum, I don't see too much going on over here. I know this is a messy chart. I apologize. Let me make it bigger for you. Same thing. All of the momentum oscillators on the 4-hour chart are going to be heavily overextended, meaning that this move probably doesn't have that much upside left. But it's the same story. You can see the range that was formed over here, range that was formed on the top over here, range on the bottom over here. This one's tighter, but this is coming into resistance. This has been a primary area of control, which means it's probably going to react as resistance over here. And low time frame on a 1 hour, it does look like there's an opportunity to go long on Ethereum, but the long is the risk to reward is not good enough for me. It's something like barely a 1.3, only just a 1.3. I prefer to take like a 1 to 5 risk to reward ratio, because this you would be looking to go into resistance over here, which will be a struggle. If it makes it through that, then this is your next zone coming in at about between $1,490 and $1,500, where I would expect the next rejection to take place. So Ethereum longs, maybe not worth it. Treat it the same way. I'd rather be sitting on my hands waiting for some sort of weakness and then looking to flip short back down on that one. NEAR. Let's have a look at NEAR. So NEAR is an interesting one because it is at a critical point. I'm going to zoom out on it a little bit over here just to give you some perspective. So you have the local highs, still waiting. If it were to break through this, if you were to take a long trade and you're looking to get back up here, that would be your next major short area. It's stuck below major resistance. This area is going to be resistance, but on the low time frame, there could potentially be a long trade opportunity, and I'll show you why. Let's just zoom in over here. So there you go. Let's zoom in. So you can see you got this diagonal that's holding price down. This horizontal is also going to be a bit of a problem to get through over here, but if you were to see price break through like this, if it breaks through over here now and it comes into this zone and it peaks over and comes back down and it manages to hold somewhere around this box, then you could look to bid that next area with your stop below the next higher low. So you got a higher low, and now you're waiting for the next one. Is this going to be the next one over here? Then you're going to put your stops underneath there and you're going to long straight into that zone. So yes, the broader picture, this still looks bearish, but this would be a decent risk to reward ratio. It hasn't played out yet, but I'm just going to show you what it would look like if it did. So let's take it over here. We said it comes back above there, stops underneath here. Your entry would be somewhere around here into that zone, flipping that resistance into support, and then you're targeting towards the top over there. That's giving you at least a 1-to-4 ratio. That's a possible worthwhile trade depending on what Bitcoin does. Looking at Solana looks more like a short to me at this exact moment in time, because if you zoom out, this is what you have. Same thing, guys, range. So it was deviation, 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 deviation. You have a diagonal coming over here. If this area fails, then you have to look all the way back down to the next major support zone. At that point, the whole market begins to sell off. But if this manages to break this over here, not only will it break that diagonal to the downside, but it will also deviate back into the range, meaning you can target towards the top of the range. So it's not ready yet. You can see it's rejecting from that zone on Solana. So you want to see something like this. You have price moving like this. You want to see price come through, and then same thing, come back down here. This is where you'll start to bid, and then you can set your stop loss underneath this zone over here, because if that fails, it means it's coming, it's lost the range. This support area, what was support, is flipping into resistance, and of course that's not going to be looking good, and then you can target higher prices on Solana. So that's kind of what I'm watching on the Solana chart. No trades have been taken yet. I will update you if they are. We do, of course, have the trading competition that has begun already. If you are not part of that and you do want to sharpen your skills, that is one of the benefits of doing the trading competition. You'll find yourself naturally looking for trade setups the whole time. I mean, my mind's been lazy for the last couple of weeks in the sense of looking for actual trades. It's just been a no trade zone. But now I find myself constantly searching for trades because I know we have the trading competition. So the link is in the description below if you do wish to join. If you don't have an account with BitGet or ByBit yet, then you can also use the link for that, which is in the description below. So I wanted to quickly touch on this one more time over here, which is the BBWP. This is why I said, guys, you can see this little bounce. This is not the expansive move yet because these things are still contracting. Have a look at the white moving average over here. It's still coming down, meaning it's still loading up for the real move. And you have to be careful from the high time frame perspective. This could end up being a liquidity grab. What is a liquidity grab? Again, it's looking to capture some of the imbalance when the market sold off very quickly over here. That could end up being a major bull trap in the long run. The short time frames, yes, there's scalp trades that you can take. And I think that brings us to the end. Very quick show. Again, the links for the competition are below over here. And then also, guys, check out PrimeXBT, the sponsor for today. Check out their link over here. If you do want to trade Forex or crypto, they offer both on their platform. If you use the promo code Kyledoops, you can get up to $7,000 in sign-up bonuses. And that is the last show for the day, is the PrimeXBT. I will see you guys all on the next show. Have a great day. Catch me on Discord. If I do take a trade, it's definitely going to be dropped there. Cheers for now. See you on the next one.